You just hold on to the short all the way to target. You have to be very patient. You don't want to look at that station long, or you just want to let it run to target, which is going to be 152.3. Or you are going to have to trade the internal swings, respecting that each swing is a complete growth wave on its own. So the swing here, there's 1, 2, 3, 4, 5. Everybody can visually see it. I can trade it, all right? Anybody can trade it. And if we know the target, that this is going from neckline to neckline, probably on this kind of very strong momentum, there should be nothing really to be concerned about, and we can repeat all inside. Just use each one of these. So this swing here, I would just sell 78.6 of it, got hit. I would sell 61.8 of, got hit. 50% didn't, so I'll just sell 78.6, gets hit. Projections are simply 161.8. It's gonna do the same wave again, that's all. So probably, maybe it will give me more profits or more profitability recurring. It's of course risky, so you may wish just to let the trade run all the way down to the desired target levels, or you may let the profit run all the way down to desired target level and use another small size trading the internals. So I hope that answers your question. The important thing now about your question in particular is that yes, the sterling yen is going down. It's going down to 152.5. No, there is a question now on sterling yen. If it goes to 153, we don't buy. We will not buy sterling yen until we get to 150 and 148. So we've been saying this since we were looking at that at our analysis. Okay, so you can see that on that weekly chart here, we have a very strong momentum plot, and this kind of momentum plot would mean that we get a lot of head and shoulders, like we're seeing here below that S. You're seeing SSS, HSSS. We're doing the same here, but on positive momentum. Now the market will try to throw you out of the position by actually taking out the stops. Remember, there are many speculators buying and there are a lot of stops. Okay, so it's a very volatile market. The breadth of this market is at least 180 points per day when it is trending, and usually you don't have stops, adequate stops, if you're holding good sizable positions that will cover 180 points. Okay, so it's very volatile. There's also a lot of actually algo trading on it. So it really is very volatile. You'll get the same head structure. Forget about the head structure itself. You want to envision this rise. Okay, so this rise occurred before, it's occurring now. It's what you're getting right now. Okay, so this is very volatile, very spasmic. All right, anything that you leave will get filled. Anything that you leave as a stop will get hit. Okay, so you don't want to buy at the upper support level. You want to buy at the lowest support level because of this aggressive volatility. What are the lowest support level? We'll look at them very shortly. Okay, so you're getting this kind of very strong volatility here because we have the same momentum plot. So there's going to be a lot of volatility at the neckline. There's a neckline here. Yes, right now many people or many traders have longs and they have the stops below the neckline. Seriously, because they were like us. Sometimes they were very aggressive and they did not want to miss out on the trend, and this broke out higher. They were going to maybe 162, suddenly it breaks lower, they're trapped in the position. Of course they will take the stop below the neckline, so the stop is going to get hit. That's it. So you buy at the stop 149. You buy of course 149 and 147. The stop here below the neckline is 147. So this is going to be tested. This is going to get hit. If you want to preserve your position seriously, you want to take to 144, you want to take to 141. So you have to play on these weaknesses or on the order flow. It is simply the order flow. Okay, so let's take a look at the actual projections for entry. We were going to enter earlier last week at 151.2. We've changed mind now. We've changed our bias because of the very negative momentum we're seeing on the 4-hour chart. All right, we'll test the neckline 147, 148. There is no point in buying 153. It is too high. There's no point in buying the top of a 1 or the top of a level A at that point. Not on the kind of momentum that we are seeing. Okay, so we have here, you see this wave here, ABC. There's going to be another ABC, just like it. Imitation, and then it's going to be a big A and a big B, and we don't have to do the labels, but you get the idea. You're getting the same cycle over and over again. Okay, so there's going to be divergence also. This is a 4-hour 1-day chart. If this is a high degree correction, it must do divergence between momentum and price. Divergence between momentum and price, everybody knows, is you are going to get lower prices on higher momentum. So let's take this to this chart here. Lower prices means you hit the spot here, 148. On higher momentum, that this wave C bounces just below over 0 or just below the 0 level, and whereas this was higher price on lower momentum, you get the classic completion of the cycle bottom out. It is classic because it has to happen, because these are price cycles. So at 153 it will not happen unless there is a very different fundamental impacting the market from what we're seeing. We're currently seeing market reversion. We are seeing money withdrawing out of the markets. So of course the yen is strengthening against the GP, against the sterling. It will continue to do so until there's another fundamental, until market sentiment changes. It will take time for this. Okay, so you're going to be seeing 148, you're going to be seeing 150 easily, maybe even 157. There is no point, again, please do not, that's my take on it, do not buy at 153. 153 is at level 1 here. It will give way very easily, I think. I know it's at the moving average. This is today's chart. It is at the neckline, more or less just below the neckline. But remember, this is the kind of momentum you're seeing. This is a degree 3 momentum on a 4-hour chart. It's very strong. Any Elliott structure that will take out a neckline will do the next neckline. It has to have degree 3 momentum. So this is the neckline. We are at the neckline. We have degree 3 momentum. We will take out the neckline. And that is a very small neckline. You should be looking at something like daily charts. Okay, so you may even take out this neckline for that matter. This is a daily chart. So we cannot consider to buy until we get to that level.